Hey guys, how's everyone doing? This is Nick from forexfornoobs.com with the daily analysis. Today is, let's bring this up. It's obviously Tuesday, but it's Tuesday the 26th of June 2018. Time is 10 o'clock here in the UK. Forgot to bring up the chat, so I'm just going to pop that out and bring it up here. So how's everyone doing? Just a quick note on how these webinars work. These webinars are only members only, so only members can attend live, but some of them get posted to YouTube afterwards publicly, and some of them are posted privately to YouTube. Just completely depends on wait up one second. Sorry, guys. All right, yeah, cool. Yeah, so just a quick note on how these webinars work. Only members can attend these webinars live, but some of them do get posted to YouTube afterwards publicly, and some of them are posted for members only. Just depends on what's discussed, really. So let's dig into this analysis. We're just going to be looking at setups on all these pairs to the right here. And across most of these time frames. We're going to be looking for price action setups. That means reversals, continuations, range bound pairs, all kinds of setups. That's what we're going to be looking for. So we'll kick things off with EURGBP. Right, so what's going on with EURGBP? It's stuck in between these two support resistance areas. It fell down here last week, and since then it's just kind of been ranging in this area. Yeah, I mean, there's not really that much opportunity to take a trade right here. At least not anything that I would be interested in. It's in between support resistance. To be honest, support resistance is just all the way through this area. This area is just a mess of support resistance. I don't really consider it that safe to trade. Right, so AUD New Zealand. AUD New Zealand is... it's heading up to that resistance area. We took a long here last week. Well, a few of us did, not everyone. Anyone who's in here enter that long trade? You guys can hear me, right? Because there's a bunch of you in here, but no one's typing in the chat. Well, whatever, it says the stream's going. Right, anyway. Okay, as long as you guys can hear me, we're all good. AUD USD, what's going on with AUD USD? AUD USD pushed up to this resistance area, is pulling away. This is it's a continuation, essentially. We're getting a continuation on AUD USD. If you were in already, that's fine, but otherwise it's a bit late to enter this one. Did anyone short AUD USD as a continuation? Doesn't look like anyone did, fair enough. Euro AUD, this one's just pushing up, heading towards the resistance area. Not much going on here right now. Yeah, it is a significant support below. It's a yearly low. That's a good point. Perhaps if you're short, do watch out for that support area. It's a very strong one. Euro AUD is rushing up to resistance. Well, it's pulling back. There might be some opportunity for continuation here if we get a pullback to this area, an overall long continuation. Let's keep an eye on that. I mean, it's obviously not happened yet, but it could happen in the in the coming day, or even on the smaller time frames. It could happen by the end of today. So what we're looking for here is just a potential continuation, price dropping down to this area, bouncing away and continuing up in line with the overall bullish trend that we're seeing. GBP, AUD. Sorry, I skipped over that without saying anything. There's not much going on here. I mean, it's just stalling on this resistance area. So yeah, there's not much going on there. EURGBP, this one's just a mess. It has been a mess for some time now. It's ranging between these two support resistance areas here. It's in a pretty tight range. And usually when a pair is ranging like this between two areas, there's lots of great opportunities to enter some really, really good trades. But unfortunately with this one, it's just way too messy. You know, sure, there's a good short opportunity right now. This is a good opportunity to go short, but do I really want to short here, given how much price has struggled to get through this area recently? I know this time it just, last time it just pushed straight down, but that's one time. If you look all through here, you just see this constant up and down. And remember, these are daily candles. So you've got to get from here to up here took 1, 2, 3, 4, 5, 6, 7, 8, 7 days. That's 7 trading days. So you're looking at 5, 6, 7, 8, 9-ish days when you include the weekend. So my point is, I'm not too bothered with shorting here. I'm not too bothered with EURGBP in general at the moment. Not too bothered with trading this range. It's just too messy. Even if you look recently, the time it took to get up to here, 1, 2, 3, 4, 5, 6, 7. Again, 7 days, so 9 days when you include the weekend. Just, yeah, I'm not that interested in it. All right, EUROJPY, what's going on? I'll keep an eye on it anyway, I should say, because I'm sure some of you who are willing to take riskier trades might want to jump short on this one, because, I mean, it is a short opportunity. We've got the 200 SMA joining together with the resistance area, and it is in a range, so it is a good short opportunity. It's just not one that I'm that keen on entering, so I'll keep an eye on it. We'll talk about it tomorrow, see how it's progressing, but I'm very unlikely to enter that. Nothing much on EURGPY, guys. EURUSD is it's just pushing back towards resistance. We were looking for a short here last week. What I was looking for was a push down, push back up, and then continuation, but it just never really happened. So there was no short opportunity. And then eventually it just shot back up. I was thinking there was a good chance it was going to continue down if it broke below these lows here, but it just never really broke. It looked like it was going to, but it just never did. But yeah, no short was entered, so it doesn't really matter. Yeah, I mean, what are we looking for here? There's potential for a short continuation if it pushes up to here, comes back down. But yeah, there's. I mean, I'm not terribly excited about this. I'm apprehensive about shorting, even as a continuation, because on the daily it looks like this trend's faltering now. It's had 2 attempts at breaking this low. This is a significant low. It's it's not a yearly low, but it's close to a yearly low. So this is close to a yearly low. It's had several attempts at breaking it, and it's failed. You know, we could potentially short when it pulls back up to here, but I wouldn't really want to target anything much lower than this support area for my initial target. I'm not convinced that it's going to break it anymore, because it's just had enough attempts in it. It seems to have held very well. You know, this is not saying that it can't be broken. Obviously, support is never so strong that it can't be broken. There is always potential for it to be broken. I'm just not convinced that going in short here with a target, an initial target below this area, is the best move. If I were going short from up here at this resistance area, I'd probably set my first target around here, or at the very least an alarm around here. Then I would monitor things closely as price approaches this area. If I'm seeing a lot of bears entering, if I'm seeing price push down towards these lows, let me zoom in a bit here. I'm a bit zoomed out. So if I see price push towards these lows, so getting close to these lows, I might keep that position open to see if it breaks. But if it comes here and it stalls like it did last time for, you know, ages, I'll probably just close that out. I mean, I'm talking about a potential trade that's not even close to forming. And more than that, I'm talking about a potential trade that's not even close to forming, but also that has formed and then went in my direction. So it's really hard to say exactly what I'll do, obviously. So yeah, let's just keep a close eye on this. We'll keep a close eye on EURUSD. Looking for shorts from up here at the roughly the 1.1770-ish. GBP/JPY is just a bit of a mess right now. Well, it's not really a mess. It's just in a messy area right now because we got support resistance quite closely packed together in this area. And things are a little tricky. And again, it is at a pretty significant low. Not quite a yearly low, but a 9-month low, let's say, roughly. It could very easily keep moving down. Is anyone short here? Potential for a short continuation is just a bit of a tricky one to enter, especially with price poking so high above this resistance area. It would make it hard to set a safe stop loss. But it's not a bad short opportunity. Continuation of the major trend. Oh, doesn't look like anyone's in it. No one's in any trades. What's going on today, guys? All right, GBP/USD, similar situation to GBP/JPY. Continuation is forming right now, a short continuation. Again, we're approaching a significant low. This one's less significant in terms of time frame. This one, it was this low in November. The last time it was actually down here was last time it was below these lows. Yeah, it was September. So around here was when it was below these lows. So, you know, it's again like a 9-month low roughly, which, you know, holds some significance. So if you're short here, do watch out for this support area here. Keep a close eye on it. See what happens when price approaches. Similar strategy to what we would do on EURUSD. You would just monitor when price gets close to it. New Zealand USD pushed up from this support area, very strong support area, but it's coming back down now since the start of the week. I think we talked about potential trade here last week. Did we? I'm pretty sure we did. We talked about potential long trade. Can't remember if anyone entered that or if anyone held over the weekend. It's at strong support right now, very strong support. But it is in a downtrend. Yeah, I probably would have definitely closed this one out at break even. Sorry, not at break even, at with that little bit of profit if I was in before the weekend. I really don't like holding trades over the weekend when they're not like So if a trade I've taken has pushed well into profit, right? If I've gone long on New Zealand USD and it's up here, then I'd be like, okay, I'm going to hold this one over the weekend. And then hopefully in the new week, it starts moving up and it goes up to my ultimate target, wherever that would be at the next resistance area or higher. But when it's just like gone a little bit up, I really, really don't like holding over the weekend in that case. So I probably would have closed out over the weekend. Oh, you jump back in? Why'd you jump back in? You're paying a lot of spread for a single trade when you're jumping in and out. You factor that into the calculations for the trade's profitability? Or you just count like the first trade as a trade itself, and then the second trade as a separate trade. So the first trade would have been a break-even trade or potentially a small loss. Or a small profitable trade, depending on where you exited, obviously. Oh yeah, definitely. There is potential for it to go back up. No doubt. It's on the strong support area. So this is a very strong support area. It's a support area that is so let's say 7 months. Oh, man, really bad at calculating this stuff in my head. I'm glad we have those risk management calculators. I'm so bad at calculating in my head. So it's the lowest point roughly that it's been in 7 months. But not only that, if you look back, this support area has held pretty strong for 2 years now. It's held strong for 2 years. This is a very significant area of support. So there's a good chance it's going to hold. But do note that last time it was down here, it did get a fair way below it. In fact, you could even pull that support area lower because it did get a fair way below it. So, do keep in mind that just because price turned around here last time, it doesn't mean that that's the lowest point it's going to go. You're going to want your stop loss now that it's heading down again, obviously. Sellers are in control, bears are in control, so it looks to be going down with a little bit of force. So I would definitely consider, if you've just entered short now, as bears are pushing down, I would definitely consider having a bit of a wide stop just to prevent a situation like this where it dips down quite a bit and then stalls. Obviously, keep the same amount of risk. I'm not saying up your risk. I'm just saying keep the risk the same. Just extend the stop. So like 1% risk is 1% risk, regardless of the size of your stop loss. No, fair enough, Mick. Sounds like you know what you're doing anyway. Yeah, I'm really not a fan of re-entering trades, especially not in a case like this where it's clear that that the bears are in control at the moment. I like to enter when it's clear I like to enter long when it's clear that bulls are in control. Right now, it looks like bears are in control. So I'd definitely, if I were entering now, which I personally wouldn't, I'd definitely consider having a wide stop, and yeah, I'd be careful. All right, moving on to USD CAD. USD CAD, this is This is a problem I have right now with my support resistance areas. For me, my support resistance areas are fine because I know that whenever I'm looking at an area, I always look to the left. Whenever I'm looking at a potential trade, I always look to the left and I see, what do I see to the left here? Because that gives me an idea of where price can get stuck here. But it seems to me like a lot of people don't do that. So I just place up this support resistance area generally roughly where I think support resistance is. But I know that price isn't going to strictly adhere to my area as if it's some magical boundary. And I know that a single line doesn't really cover anything in terms of support resistance. The reality is, for this pair, there's a lot of support resistance throughout this kind of entire zone here. Now, when I place mine, I don't really expand each one out to where I think the support resistance areas are. To where I think price is going to struggle. I just place mine and that's it, because I always know first thing I do is look to the left. And when I look to the left, what do I see here? I see some clear points where price has bounced away from, both towards the top and towards the bottom of this area. So I was asked yesterday, would you go long here for a continuation trade? And my answer was no, I wouldn't go long here for a continuation trade, because price is clearly struggling to get up above these highs here around about the 133.30, 133.35. Price is clearly struggling. There's no clear indication that the bulls are in control of price right now. I'm not saying that it's a bad setup to enter. I mean, it's still in line with the trend. Bears struggling to push down. Price gapped up a little bit. So overall, bulls are stronger. I just personally wouldn't enter it because it's just a messy area of support resistance. I really hate messy areas of support resistance, because what do messy areas do? They give us barriers between our entry price and our target price. So let's say our target price is up here, our entry price is down here. I like having a clear run between target and entry. When there's just messiness throughout and there's all these barriers through here, we no longer have a clear run. We have potential points at which price is going to struggle to get through before hitting our target. I really don't like that. I'd like to minimize the barriers ahead of my targets and maximize the barriers ahead of my stop losses. Because the more barriers between your entry and your stop, the better. The less barriers between your entry and your target, the better. So yeah, I'm not long on this. USDCHF. I mean, it's in between support resistance. It looks like it might be forming a range, which would be quite nice if price is getting stuck in a range. A lot of the times when ranges form, they won't adhere to all the support resistance areas. Sometimes they'll just form their own kind of like mini support resistance throughout. So I would keep a close eye on, to keep things from getting confusing. I'm just going to place this upper one as a horizontal line instead. So I'd keep an eye on roughly things in. I'm not saying it's in a range yet. It's too early to call it. But I'd keep an eye on this kind of thing happening on USDCHF. That could give us a nice set of potential trades. Whenever price falls into a tight range, there's always good opportunities to take trades. So you could long the bottom, short the top, long the bottom, short the top, that kind of thing. It's too early to call it, but it does look like a potential range might be forming. So I'll keep this line here. We'll monitor it. We'll see how it plays out. If price does dip down to the support area, I will potentially be looking for a long from there, back up to this potentially this potential resistance zone through here. USDJPY. I mean, this one also looks to be forming a range. This one looks to be, yeah, stuck in between these 2 points. So also keeping an eye on here for potential range. Just did like something to mark out ranges. Where's the... All right, let's move this out of the way for a second. All right, this is what I'm looking for. Can you extend these left, right? No, you can't really extend. Push that up to like 900 though. Would that do it? Kind of. Nice. All right, and you can still click on it from there. Cool. Yay, I've come up with a new visualization on my charts. Just a potential range bound marker. And I may as well add one here. That was a bad placement. I'm going to start it up here and end it down there. You have to be very flexible with ranges. You have to see how they develop. It's early on in both these ones, so don't marry yourself to the idea that it's always going to bounce away from up here. A lot of the times, especially in a bullish trend or a trend that was formerly bullish, with ranges, when it falls into a range, it will sometimes bounce from this and then sometimes bounce from that. So a lot of people think that ranges are very simple and very strict and they always bounce from the same thing. But you know, sometimes price can be in a range and it could be bouncing from a weak area of support resistance and then a strong area of support resistance, and then next time it'll bounce from the weak, maybe next time it'll bounce from the weak again from the weak, and then it'll go up to the strong this time, and then the weak. So you have to be a bit flexible with how you're visualizing that range and how you're trading in that range. Don't marry yourself to the idea that, oh, it's always going to bounce from this one here because it bounced from here the last 2 times. Sometimes it can push up. Sometimes this early in a range, it might not even become a range. I'm just marking it out because it has potential to be. So we'll just see how it plays out. Right, so I'm going to mark these 2 so we can keep an eye on them. I'm short on USD. Do you think it would be smart to look for... I'm not sure if you mean early exit. I'm assuming you do, but if you don't, just let me know. But if you do mean early exit, which would be my guess. Why'd you enter short? You entered short from this resistance area, presumably. So you had an area down there. Oops. So your short, or was your short entry up here and you've been in it for quite some time? It's hard to comment on your trade without knowing, like, you know, what your risk reward ratios are and all that kind of stuff. Where your entry is. I'm just waiting for Ash to tell us some more details. And on the 15th, so up there. Stop up there. Alright, I've got to change that entry. Which is going to change the stop. Tight stop loss. Your signature move, Ash. All right. Guessing that target you gave was wrong. I'm going to guess your target is 9857. Because it's the only logical one. Oh, sorry. No, I was reading that wrong. That's your entry, not your target. So what is your target then? You have to give me all the details of the trade. I mean, it's reached a risk to reward ratio of 2 already from the looks of it. It's now sitting at a risk to reward ratio of 1.4, which sucks. All right, I need to go soon, so I can't hang around and wait for the answers to come in because I think there is a slight delay, like a 5 to 10 second delay. And also, you've said a few times, Ash, that you're a slow typer. So we could discuss this more on Skype or on the forum. You don't have a hard TP. Okay, that's not how you trade. I'm not sure why you're doing that. You don't get in without at least an idea of your target. Just because you're hoping something starts in a downtrend, something starts trending down. Been making a lot of mistakes lately, Ash. You need to think about the reasons for entering a trade. It's not as bad as entering a trade without a stop loss, but it's still a bad move to enter a trade without an idea of where you want to target. Return of a risk to reward ratio of 2 is quite good in a trade, especially on a trade like this. I don't see why you're hoping it's starting a downtrend when there's no clear indication of a downtrend. You can't enter a trade in the hope that it's starting a downtrend. You can't say, oh, I'm going to cross my fingers and just hope that this is trending down now. When there's no clear, you could argue, yeah, it's possible that a downtrend has started, but there's so many things that are also against a downtrend. I mean, I guess you could do this. I'm not a big fan of trend lines, as most of you guys know, and draw this trend line and then say, oh, it's a pretty crappy trend line, but, roughly, oh, that trend line's broken. So the downtrend started, but trend lines are very hit and miss, especially in cases like this. I mean, I could easily draw a trend line here now and say, well, price bounced here, price bounced there, and now it looks like it's bouncing again. continuation of this uptrend. So, you know, trend lines aren't really going to help you out here. And I know I'm going to annoy some people with that because some people love trend lines and they do them right and they rely on them, and that's completely fine. I'm just saying, personally, I don't find trend lines to be that useful for judging when a trend is over, because it's quite easy to redraw them based on new data and then say that the trend is still active. So I'm personally not a huge trendline guy. Price is still sitting above the 200 SMA, the 200 MA, whatever you want to call it, simple moving average. This is a strong area of support resistance. Generally, when price gets above this area, it indicates things are trending up. It's a strong support resistance area used by big traders. So we're talking banks, hedge funds, managed funds, that kind of stuff. So price is above that 200 SMA. It's not even close to it. You know, I'd be more tempted to trade to go short if it was breaking below that 200 SMA. I'd be more tempted, but to just kind of like say, oh, I think price is going to trend down now and jump in short without a target, it's just a bad move. Sorry if it feels like I'm picking on you. I'm just, you know, when someone mentions something like this, at the risk of making them feel bad, I think it's an important thing to discuss. That way everyone else watching knows that it's a bit risky making those kinds of trading decisions. One of the biggest mistakes traders make is trying to predict the end of a trend, because no one can really predict the end of a trend. Trying to say, oh, I think this trend's ending, so I'm going to do that. Especially this early on, you can't predict the end of a trend. But yeah, back to your original question. Should you exit? I mean, I probably would have closed out when it hit my target of a risk to reward ratio of 2. I know I've got the support area down here, but price has shown that it's stalling up here higher anyway. And, you know, the downtrend's not broken. Price overall is still trending up. There is definite potential for price to drop down to this support area in the coming day. And if you want to hold on to your trade for that, that's fine. It's really hard to give advice on a trade that I would never have entered, because I see no like logical reason to have entered this short. It's just a very risky trade. It's not even traded from a strong resistance area. It's very hard to give advice on a trade that I would never have entered. But if I had, you know, had a momentary lapse in my trading mindset and said, screw it, I just want to enter a trade and I'm going to enter this risky trade, the way I would handle it right now is, well, I would have been out with 1.2, but then I had a further momentary lapse and I'm like, oh, no, I think I'm just going to hold this one onto this one, even though I've gotten really lucky and I've got my risk to reward ratio of 1 to 2. I'd probably in this situation just move my stop to break even and just leave it open with a target. Well, now that it's safe, I'd say I'd either hold my target, where it was, where I would have personally exited at a 2 risk to reward ratio, or down at this support area. So, yeah, the way I would handle it would be move my stop loss to break even. Hopefully that answers your question. Are there any other questions, guys? Sorry, did you say that and did I miss it? No, you didn't. Aziz, do you have access to the full Forex Mastermind course that includes the risk management stuff? Because if you do, Viet released an incredibly amazing video where he used data from a lot of the trades we've taken. So like users in the forum. All right. I was going to suggest watching that video because it's just like mind-blowingly good, and I'm pretty sure it's going to change my trading this year as I try to implement some of those things. There's loads of different strategies for doing this. I don't have a solid rule of thumb at the moment. I've honestly been winging it a lot. But with the help of Viet's case study, I'm looking to implement a kind of a rule set into how I adjust my support, my stop loss in a trade. I've been using price action pretty much. I've been using price action. So when I say winging it, it's not like just completely random. It's just I've been looking at the price action and allowing that to tell me when to move my stop loss. So I'd be looking at things like lower lows, lower highs, that kind of stuff. But there are better ways to do it. Yeah, I can't really get into that right now because it's very complicated, and you have to watch the video to fully understand, because it's a complex thing. It's not just super simple that can be explained. And I wouldn't do it justice anyway, because it's not my case study. It's Viet's case study. So I'm not going to go into all the details of how I'm doing it. Plus, I haven't really figured out exactly how I'm going to implement Viet's findings. It's a work in progress because there's a lot of testing involved. I'm not just going to, just because Viet has some results, I'm not going to just follow those results. I obviously need to do testing on my own trades, because my trades are ultimately going to be different to the ones he used in the study. So long story short, look at your highs and lows, and you can ask about it in the forum for a more detailed explanation of how I've been doing it up until now. Are there any other questions, guys? Right, well, it doesn't look like there's any other questions. There's not much point doing a summary of the analysis. I mean, we talked about all these recently. I guess I may as well do a quick one. Just check out USDCHF, USDJPY. They look like they might be falling into a range, and range-bound periods are some of the best periods in which to trade reversals. Reversals in ranges are just easy trading. It's like shooting fish in a barrel. Although Mythbusters proved that that's not actually easy, but you know what I mean. Euro USD, look for a push up to this resistance area, potential continuation, but I would be very careful with targets below this support area here at 1.156 roughly. So when I say potential continuations, be looking for a move up to there and then a fall back down to here. I mean, this could also be falling into a range. You know, it's not uncommon at the end of major trends that price falls into ranges. That's I mean, you could even see it up here, right? Look up here. Strong bullish trend. Price got to the top. What happened? It fell into a range, and this range had a kind of variable top. So remember how I was saying, damn it, wrong tool. Remember I was saying price doesn't always, even when it's in a range, it doesn't always just follow these neat little rules that make your life easy, where it's always going to bounce from that top. Sometimes it's going to bounce from here. Sometimes it's going to bounce from in between there. You know, that's the reality of trading. It's not always all neatly packed and easy for you. It does get hard, but you know, price got to the top here and then fell into a range. Now, this could very well be happening down here. Price could get to the bottom here and fall into a range. Very possible. It's already had two bounces from the bottom, which is nice. Let's see what happens when it pushes back up to here. It could drop down, a continuation of this major trend, and then it could break through here. You know, it's hard to predict exactly what it will do, but my point is keep an eye on this strong resistance area up here, the 1.1775. Keep an eye on that one because there are good potentials for shorts here. EURGBP, I'm not trading this, but there is a potential short here from this resistance area if you want to take it. It's just way too messy for me. Way too messy. And EURAUD, we're just looking at a potential long continuation. So, that wraps things up, guys. I'll see you for tomorrow's analysis, which will be at 11 tomorrow. Thanks for attending and see you later.